to the Money Watch now, and despite a lot of uncertainty, Wall Street continues to perform, and the S&P is touching all-time highs this week. Every Wednesday, we're joined by our financial expert, Chuck Zodda, the managing partner and chief investment officer for the Armstrong Advisory Group. Thanks for checking in with us again this week. Inflation is up, interest rates are still high, not to mention electricity bills are through the roof. How are investors still coming out on top?
Well, I think a couple different things. The first is we always talk about the divergence that shows up between Wall Street and Main Street, where Wall Street often feels pain prior to, individuals. But sometimes in this cycle, it's been a little bit reversed just because it's been a very different economic environment due to changes that have happened since the COVID-19 pandemic. And so I think that when you look at this, it's a case where profits are still high right now. Expectations for profits are still high. And so until you start to see what's going on with Main Street impacting corporate profits, it's something where the market can diverge a little bit from what individuals are experiencing in their own lives. And I think that's what we're seeing right now is just that, hey, you still don't have any real impact to corporate profits. And until that happens, or until investors start to get nervous about it happening, it's tough for a meaningful dip in markets to develop.
Many people are worried about President Trump's tariffs. We've been talking about this for a while and the possibility that they could upset the market. Do we still think it's a possibility, or do investors maybe starting to see these as negotiation tools?
Well, I think it's probably a little bit of both. And I think what is challenging to sort through right now is what is actually going to end up being implemented, simply because we've already seen a couple of instances where these have been used as negotiation tools. And I think where it becomes challenging for businesses, but also for individuals to a certain extent, is, hey, if you're trying to make plans for the next 6 to 12 months as to what you want your business to look like, if you don't have certainty about what your cost structure is going to be, you might just say, look, I just need to sit and wait until I know a little bit more. And the challenge there for the U.S. economy becomes, hey, if businesses start pulling back on investment, either domestically or abroad, it does start to have a little bit of an impact on slowing the U.S. or the global economy. And so I think this is something that we need to be cognizant of, because businesses like certainty in being able to say, hey, I can go and build a factory, whether it's in Indiana, in Canada, in Mexico, in Taiwan, wherever it is, I can build a factory in that location and I know what my cost is going to be. If a business says, hey, there's a chance that my costs may end up being higher as a result of tariffs that I don't yet know about, they might decide not to make that investment. And even domestically, the question becomes, okay, let's say that I think tariffs are going to be implemented and I decide to build something in the United States. Well, what if those just turn out to be a negotiating tool, and now I've got a higher cost structure in the U.S. and someone else can, beat me at price by using foreign imported materials or finished goods? So I think that's a real question that businesses are trying to sort through right now.
We've been hearing so much about DOGE. Is there any concern on Wall Street about DOGE cutting into the federal deficit and then what that might do to corporate profits?
But it doesn't seem to be at this point. And I think part of this is we're still trying to sort through exactly what the impact is going to be. And so I think the big thing that I'm watching is just going to be the actual reports from the Treasury Department saying, hey, here's what we sent out this week, this month, this quarter in payments. How is that actually being impacted relative to prior years? Just because there's so much noise right now that, at least for me, it's challenging to keep up with and understand exactly what might be being impacted. So I think ultimately the proof is going to be in the pudding, where we say, hey, is there actually a net change in Treasury outlays year over year? If so, then we can start to say this is what it looks like over the longer term and how it may impact the economy or profits. But at this point, I think it's really hard to get a handle on exactly how it may be impacting things today.
A Bank of America survey found that the average person's portfolio is just 3.5% cash at the moment. So what does that tell you about the market?
Well, it's amongst the lowest levels that we've seen since they began doing this survey, I think maybe 25 or 30 years ago. And obviously, it speaks to the fact that investors aren't particularly nervous about this market right now. Now, that doesn't mean that this market is at risk of imminent collapse. It's not something where you can point to previous instances and say this definitely means something bad is going to happen. But it does mean that, hey, investors are a little bit more stretched than they normally are. And so it becomes a little bit challenging for investors to deal with a market pullback simply because they have, all of their money deployed or a significant amount of it deployed at this point. And so it potentially causes more pain for them. And that could potentially result in a market sell-off that gets a little bit steeper as they try to sell things to avoid more pain. So again, I don't think it's something where you say, hey, next week or next month, something's definitely going to happen. But it is one of those statistics that you look at and you kind of put it into, your puzzle and say, yeah, this is not ideal in terms of what you want to see, but it still doesn't mean that anything is imminent as far as a market downturn.
All right. Chuck Zodda of the Armstrong Advisory Group. Always appreciate your insight. Thanks for chatting with us.
All right. Have a great day.